Have you ever heard the term accredited investor and wondered why certain investments are only available to specific people? In the financial world, not everyone gets access to the same investment opportunities, and that's where accredited investors come in. An accredited investor is a person or organization that meets specific financial requirements, allowing them to invest in certain higher risk private investments that are not available to the general public. In simple terms, it's someone considered financially experienced or wealthy enough to handle more complex investment risks. Now, why does this category exist? Because some investments, like private equity, hedge funds, venture capital, or startup funding, carry higher risks and are less regulated than public investments. Governments and regulators restrict access to these investments to protect ordinary investors from risks they may not fully understand or afford. So, to qualify as an accredited investor, you usually need to meet certain income, net worth, or professional criteria. For example, in the United States, an individual often qualifies if they have a high annual income for multiple years or a net worth above a certain threshold, excluding their primary home. Some professional financial licenses can also qualify someone. Now, being accredited doesn't mean guaranteed success or intelligence. It simply means the person meets the legal standards for access to these investments. So, what kinds of investments become available? Accredited investors may gain access to private companies before they go public, hedge funds, private placements, venture capital deals, and other investments not typically offered on stock exchanges. These opportunities can potentially offer high returns, but also much higher risk and lower liquidity. Now, let's talk about responsibilities and duties. An accredited investor is expected to understand investment risk, perform due diligence, and make informed decisions without relying heavily on regulatory protection. Because these investments may have less disclosure and oversight, the investor takes on more personal responsibility. That means accredited investing is not just about having money, it's about understanding risk. A common misunderstanding is thinking accredited investors always make better investments. They don't. Access to exclusive opportunities does not guarantee profits, and many private investments fail. Another misconception is that accreditation is a status symbol. Legally, it's mainly a regulatory category designed around financial risk tolerance and investor protection. So, what's the key takeaway? An accredited investor is someone who meets specific financial or professional requirements that allow access to higher risk private investments. With that access comes greater responsibility, less regulatory protection, and the need for deeper financial understanding. And once you understand accredited investors, you begin to see how the financial world separates everyday investing from more advanced private market opportunities.